healthcare has now become very individualistic. I want it to be fit for me. And when my employer buys my healthcare coverage, they buy for the average.
Right. So what would you do? I mean, look, Elon Musk was out there just earlier this week. We were talking about it yesterday, suggesting that the answer is if we could get a huge percentage of Americans on GLP-1s, we could bring the cost down of healthcare in a remarkable way, especially if you could get the price of GLP-1s to come down in a remarkable way. What would you do?
What I would do is I would eliminate employer-sponsored insurance.
You say that, and it stops my heart a little bit, because those of us who have employer health care think, oh my gosh, getting thrown in so everybody's dealing with Medicare Advantage, that seems like a pretty terrible thing. And I would argue that my health care insurance, while I'm not always thrilled with it, at least I have an employer who can go and argue for the mass of us. There's a lot of us, and that at least has some bulk. If I'm out there on my own, it feels like there wouldn't be any protection that comes with it.
The ability of your employer to negotiate against a large insurance company that has much a larger relationship with the provider community is very stinted now. You can't get stunted. You can't do it now. And
you're saying the companies have no leverage?
The companies have no leverage now.
Interesting.
And you look at the basic foundation of our economy, which is small business and middle market, they have none. And they're seeing double-digit rate increases when just over in the individual market, our trend's been 3.5% each year. Why?
Do the claims get turned down more readily in the individual market than they do? So it's the same.
Our denial rate's less than it's 12%. Is our denial rate.
United Healthcare, I'd seen 23 to 33%.
Yep, and the only one that's lower than we are is Kaiser, because they don't do it.
That was the CEO of OSCR Health, which is striving to be a modern, tech-driven, AI-fueled, user-friendly health insurance company, helping individuals, families, and small businesses obtain health insurance that comes with fair, transparent, and preventative care on a modern, tech-focused platform. OSCR Health's app makes it easy for tech-savvy individuals to manage their healthcare plans and personalize them for their specific needs. This modern philosophy around health insurance has been something consumers have been yearning for, especially in the past year, with United Healthcare, the biggest player in this industry, being investigated for Medicare fraud by the government, potentially opening up a big chunk of market share to be taken over by up-and-coming modern competitors such as OSCR Health. Clover Health is OSCR's main small-cap rival in the modernized healthcare space. But unlike OSCR, 100% of Clover's business is through Medicare Advantage, which is focused towards seniors who need a lot more coverage out of their healthcare plans than younger individuals do. Also, unlike OSCR, Clover is currently unprofitable and looks like they'll require another year or two to become profitable, while OSCR Health just had their third and most profitable quarter ever. Financially, OSCR Health looks like an amazing opportunity with extremely high and consistent revenue growth of about 50% per year on average for the past 2 years, and over 100% per year on average for the past 5 years. It's very rare to find a company with this high of annualized revenue growth to also be so consistent with it. A unique point about OSCR's financials is their book value per share being $5.26, which is close to half of their current share price of $13.80, making their current price-to-book ratio 2.62, which for a newly profitable company growing this fast makes OSCR still seem undervalued, even though their trailing PE ratio is 49. But their forward PE ratio is 19.7, which suggests that they are undervalued. They're expecting their earnings per share to be $1.89 in 2027, which is well over double their 2025 estimate of 73 cents, which is an earnings per share growth rate that I consider to be one of the highest you can find. A quick comparison you can make with their market cap is to United Healthcare, which currently has a market cap of $274 billion, which is after a big 50% drop in their stock price. OSCR Health's market cap is currently $3 billion, so if OSCR Health could grow to be just 10% the size of United Health's current size, then that gives OSCR Health a $27 billion market cap, which would be close to a 10x move from here, putting the share price over $100. Thinking about their market cap this way isn't the most financially sound way to think about it, but looking at OSCR Health's graph and putting a fib retracement on it, that over $100 a share price does coincide with the upper fib levels, with the 2.6 level being $93 and the highest level being at $150. So just by looking at their high growth rate, considering that they're not currently overvalued, Comparing them to the biggest company in their space, United Healthcare, and looking at the fib retracement, a price target between $93 and $150 does seem realistic for a company like this in the next 5 years. There is also a very large bullish divergence on the daily time frame that started when the RSI went below 30 in October of 2024, bounced above 30 multiple times at lower share prices, with the last bounce being a month ago in April of 2025, suggesting that right now, at this current dip, will likely be a great entry point in that we have already or will soon see a macro bottom for the stock. So I have been and am still currently trying to fill plenty of limit orders around this price range, expecting an almost 10x return in the next 5 years. And even if that doesn't happen, a 4x return to the 1.6 fib level at about $58 would also be a great market-beating return and does align with the higher levels of this fib retracement, which is from a smaller time frame from this high from May 2024 to our recent low in April of 2025.